guys, welcome back to my YouTube channel. So today I wanted to go over a basic supply and demand video. This was originally for the people that were in my Telegram chat, but I figured that I should just go ahead and make a video for my YouTube since I kind of fell off with that. I pretty much just wanted to cover some of the information on like how to set up your chart, basic supply and demand. I use a lot of Fibonacci to confirm my setups, but I just wanted to show you guys like how I do that and like what like really looking for when I do start charting and when I do set up. Today's Sunday, the 25th of August, so tomorrow I will be day trading, but the session that I usually hop into is the London market. So if you guys can see that here, that's basically going to be this blue line is when London starts, which is 4 a.m. Eastern Standard Time. But I'm not getting up that early, so I'll be starting around 7:15, and that's like right around here. 7:15, 7:20. This is going by a 5-minute chart, by the way. I'm actually going to also let you guys know. So that's the London, that is New York. What I'm usually doing is on the 5-minute chart, but if you guys can see here for reference, this is Fibonacci that I am using, but to show you guys how to do like the bar replay so we can actually go through supply and demand examples and what I'm looking for in the moment, I have to be on the regular one, the regular candlesticks. So I'm going to blow this up for you guys. So typically what I am looking for when I am setting up on a chart, by the way, this is TradingView and my broker is Trade8. So at the bottom you can get into all of that, but I'm not going to go too deep into like setting up like your actual account, just kind of like my strategy and like what I do. So this is going to be the bar replay on TradingView, and we can start at 5:20. So we can say that none of this even happened, all this, we can like kind of disregard this. You know what, I'm just gonna take it off so we can actually start fresh. So the reason why I do actually stay on the Fibonacci candles, this is going way too fast, is because it's better to see and comprehend like what the price is doing with your eyes. The biggest thing that I tell people that are learning how to trade is that you're really just training your eyes. So let's pause for a minute. This is already at 7:20, 7:15, 7:20, 7:25. Okay, so we're like just getting into the market. We're just, obviously you want to do like your prep the day before, which we are kind of doing right now, but in the moment this is real time. So let's say we're at 7:15, whatever. So what I'm seeing right now is that price a couple hours ago around 5:20, 5:25 went ahead and started going up. It started going up so to the point where it passed this last higher high. So I'm just going to go ahead and mark this, that it broke that structure. And we're going to zoom out a little bit more and like look at the bigger picture of it, but to the first eye view, this is what you're going to see. So it breaks this break of structure, right? What we see again is that it breaks another high. It went up, came down, it almost tapped this yellow line. It kind of didn't, but it was close. But then it went ahead and it passed another break of structure. So what I'm realizing is that it's breaking this structure, but what caused that to break it? And we're going to start from down here. So this candle and this candle, it was like the pop off. Excuse me. That was the pop off of the break of structure. So I'm going to go ahead and label this. This is going to be our demand zone. Demand zone on a 5-minute. And if we zoom out, this was actually the Friday that just passed, Today's Sunday. So we can zoom out a little bit. We're taking a look, time, the price isn't moving as fast as this is going, but we're just looking. So what I'm seeing is that this price then already came up and it was trying to knock this like demand zone out. But it's kind of irrelevant. So all right. So this was the last lower low. This was the last high that was broken from all this. This now right here just got broken from what we're doing over here. So this was just broken. We're going to put a line right here. That was just broken. So now before this was the last higher high. So I'm expecting price to come back down and hit this zone to fill in the gap between this and this. And then you're going to go back up and hit this profit. That's what I'm waiting for you to do. Or you're going to bounce off of this and come back. All right. So mind you, this is where the London starts. This is where price is currently at 725. We just got on 10 minutes ago. And I already seen that price broke this structure. It broke this structure. Thursday night, it broke this structure, this high, and it went past it. And then you just broke another one. So you're breaking structure. So you're trying to get up there and meet these gaps in between, but you need to keep bouncing off of something to get up there. Okay, cool. So we're going to pick it up a little bit. So now what I'm seeing is that I'm waiting for price to either bounce off of this yellow line and go up, or it's going to come back into this demand zone, which it should do. And I don't remember how I just had it set up prior, so this is fresh again. And you see how it's playing around this line that we just passed. Here we go. Now you came all the way down. You came all the way down. You were either going to bounce off of this yellow line, or you were going to confirm it 100% completely and go into this demand zone and then pop off. You see how they tried to scare you and make it seem like it was about to go up and then it dropped? Because they have gaps to fill. These gaps need to be filled. So you're either about to tap off of this, or I'm really going to be patient. I'm going to wait for you to hit this demand zone, and then you're going to go up. Let's actually slow it down too a little bit. And there it went. So that's the thing with trading these breakup structures and supply and demand, is that what it did, it never even came back into what started it. It came and it barely just hit this candle right here. But what it did is that it bounced off that first breakup structure. It bounced off of this. It's not always going to do that. It's usually going to come in and hit the demand zone, because regardless, yeah, it just went up. It just went up. We're going to play this back a little bit. But the price still has to come back down and hit this. Price still has to come back down and hit this. It has to come down regardless. But that was still kind of like a fake out, because it made you think it was about to come and do it. And I didn't even take this trade. So this week prior, I did not trade at all, because just for like traveling and business purposes. But I'm just like back testing on like what were like the little things that I've seen, and trying to help some of the people that are still new kind of get an idea of like what I would be looking for. So cool. Let's go back a little bit more, and let's say that we did take this trade when price did hit the yellow line. We're going to break that down as far as entry and exit. So we know that price already broke this pink line, this structure right here. We already broke this. So I'm going to get rid of that because that happened before I even got up out of the bed and looked at the charts. So I know that price has to come up and hit this pink line. So I'm waiting for, this is my target right here. This is my first target. Price is going to hit this line, which it just did, and now it needs to come and hit this pink line. So as far as my entry goes, let's play it. Entry. So the line that taps it, I'm waiting to see that rejection. So I need to see a candlestick that's going to not only pass one of these candles, but it's going to close passing it. So I'll show you that. Let me actually slow it down a little bit more. And I'm going in for a buy. See, you don't want to close though. You're not trying to close above that candle. And there it was. Now you're trying to reach past this gray candle, and you're going to close up here. So I'm going to get in for this buy. It says 6. This is a paper trade back test. So this is not real money. This is just for education purposes. So I'm going to put my TP up here, which is a take profit. Cool, 984. I'm going to put my stop loss. I'm going to put it down here. Only because if I was actually in this trade anyway, I wasn't getting in until this demand zone was hit. Because you have to keep the discipline to respect your trade and to stay disciplined. So, I don't know. I wouldn't have taken that personally, but it was still a solid trade. So let's fast forward. In that candle, right there at 10:05, it hit take profit. And then here it goes. It goes all the way up, hits our take profit, goes past the take profit, comes down, hits our supply zone. It goes past the supply zone. And then say we did this. Say we back tested. Say that one didn't work. I was going to say if we even got into the trade right here, when we seen that it was passing right there and then got in. But part of my rule book personally is that I'm not placing any trades past 10:30. So this is another reason why I wouldn't have even taken this trade, because it was just too much going on. And yeah, basically that. So that's not like the best setup, but let's try to find another one. And I'm going to, okay, so we are on to the next trade. For whatever reason, my audio went out while I was going over this, so I'm just going over it again for you guys. Basically, this is going back to Tuesday on the 24th. What I was going over is that the SMA, I have 3 SMAs, another indicator. That's going to be this white line, the red line, and the blue line. This is just showing the simple moving averages of what price is doing. So as you can see, I usually just only use it for the white line, and it just stays on the chart anyway, the other two. But what you're seeing is that price, it's usually going to stay over the white line. It's either going to stay over the white line or it's going to stay under it. So you can see price staying under it. You can see it staying over it. So that's just another indicator besides the blue, which is London open, and then the orange, which is New York open, which is at 9. So this was a trade that I had set up. what I was going over before I even put this is that this is at 6:10. So this is an hour before we're even getting into the session. But just to go over like what I'm seeing now is that this is when London opened. I seen a price structure break from here. This was broken. It broke this last lower low. It also broke this last lower low. Going down and back, there's another low for it to fill in. So you see there's a gap between this and this. That needs to be filled. But my question is, what is causing this gap? And that's going to be this last higher high. Yes, it can be, it's very hard to see with this kill zone right here. It could be this demand zone, but it's really just going to try to fill in that last higher high. So I'm going to put a zone here, and that's going to make up for that. I'm going to put my kill zone back so we know where we're at, and we're going to speed it up just to see what we get. So my prediction, my bias is that price is breaking these structures. It's going to try to come and hit this, but it needs to hit this zone so I can go on for a sell and that it can go down. Even though I just said I'm also looking at the SMA to see like what it's trying to stay with. It's staying above the white line, right? So if I see a confirmation that it's trying to break through it, that's just also just going to let me know that I need to be going for a sell and not a buy. Because another thing that I was looking at to get off these kill zones and to check in like with the 1 hour, what you usually want to do is see where price is. You want to see where the last low is by going down to the left. That was that last low. You want to go up to the left to see that last high. So besides these two right here, let's see our last lower low on the 1 hour down here. So I know price has to come back down to this, right? Going from price up to the left, where is my last high? It already passed this. It has to be right here. So I know price is going to stay in between these pink lines, right? Let's go back to the is I'm waiting for price to hit this and tank. That's my bias. Our kill zones, we're at 740, 745. I'm still waiting. You like I said, besides training your eyes, it's really just patience. So now we're going into filling this yellow, this gap. Now we just broke that structure. Now it's 9 a.m. New York just opened. What are we doing? Breaks the SMA again. Hits our zone. And is pushing down. So for a real trade, I'm looking to get in as soon as price closes up under this blue line that just hit this. So let's see, because it's going pretty fast right now. So we can get in right here because price is right there where it would have passed. I'm going in for a sell. And I want to see price hit this. I could adjust it to this and just go for my 1-to-1. That's a 1-to-1. Or I can go for this. Or I can watch price come and fill in this gap. Because my bias is that it's already going for a sell. So let's put our take profit down here. Let's put our stop loss right here. Because if it already hit our zone, if it's going to go past the zone, then that's it. You just didn't win the trade. So let's slow this down a little bit. And let's watch what it does now. Automatically, that candlestick hits our take profit. Now, if that was for 6 contracts, that would have been for 1,047. But that's just going to show the power of supply and demand, waiting for your trade, waiting for it to hit your zone, and knowing that these gaps need to be filled in. There's always talk with like the manipulation and stuff like that, and like the big money, but you need to go with what they're going with. You need to see what they're seeing. And that trade would have been placed at 10.10, would have got out at 10.25. Like, you would have been in and out. Or you could have played with all this, thinking it's about to go down, and got psyched out of your money just for it to come back down and hit those take profits again. It's just meeting the gaps. Now, like I said, this is on the regular candlesticks. I keep mine on Fibonacci. So you can change the bar candles. I'm keeping it on this. And you can't do bar replay, so all this is probably going to wipe away. But it's just better on your eyes. So usually when it's turning red, it's because it's staying red. When it's turning green, yeah, it can mess a little, like it's going to like be in between both, even though we're not even trading during these hours. But for the most part, the color that it's in is the color that it's staying in. So like how we got in right here, we got in up here, it stayed red. It respected the trade. This was a perfect trade placed on Tuesday, August 20th. That is the ideal trade for supply and demand. Using Fibonacci. Now, if we wanted to go ahead and throw a fib on it for Fibonacci, this is also what I like to do to confirm trades, is that this was our high. So I'm placing it right here. Going down, let's say we could have just put it for right here. This would have been, so, hold on, let me just disregard this. This was where that red was that made this pop off. You see this? This break of structure right here? From these little red candles, that's that lower low. So we were already up here during 7 o'clock, 7, whatever. But this was the last break of structure before that. Not like right before it, but the lowest break of structure underneath those times. I'm trying to explain this the best way I can, by the way. So I'm going to place our Fibonacci ending right there. And if you guys want me to show you how to set this up, just let me know and I can. So this is our Fibonacci. Just pay attention to this red, this yellow, and all this green. This yellow line right here would be entry. You can see we got in right around here anyway. This would have been the entry. This first green line where this breakup structure is that we were waiting for it to fill into that gap. That would have been our first take profit, second take profit, third take profit, fourth take profit. What did price do? It already hit. Let's go back to the bar replay. So we're right here on the regular candlesticks. We waited for price to hit our demand zone, right? Let's say we were only just using Fibonacci to like help confirm and disregard this. We're going to wait for price to come and hit this yellow line, right? Hits it. Plays with that right there. Get in. Take profit. Say we would have went all the way. It already hit our first one, our second one, our third one went past the fib. And that would have been it. That's just another help. That's like, you can simply just do Fibonacci, or you can just do supply and demand. You can do both and help the other one basically confirm supply and demand. That's what I like to do. But